Assalamu alaikum. Given the massive run-up in Bitcoin's price as of late, I think a natural question to ask is it too late to get into Bitcoin? Or alternatively, should I get out? As of the date of this recording, Bitcoin's price reached a new high, as it seems to every day as of late, breaking $57,000 per coin. So in this video, I'm going to look at the most pessimistic view for where the price of Bitcoin is going and the most optimistic view for where the price of Bitcoin is going, and analyze the arguments for both views to see, in my opinion, what holds the most merit. Now, as always, this is not investment advice. Make sure to do your own research. You know the drill. Alright, so starting with the most pessimistic view for where the price of Bitcoin is going, and that view basically sees Bitcoin going to zero. People who are of this view cite three primary reasons why they think the cryptocurrency is going to go bust. The first reason that you'll hear from people who hold this view is that Bitcoin holds no intrinsic value. This line of thinking essentially reasons that the intrinsic value of Bitcoin is precisely and exactly zero. There is nothing there. You can't hold Bitcoin, you can't wear it. It has no physical existence, and eventually reality catches up with us all. The reality of Bitcoin is that it has no intrinsic value, and therefore the price for this non-existent value should be zero, and that's what eventually the price of Bitcoin will become. Eventually, someone's going to be brave enough to realize that the emperor has no clothes, and everyone is going to wake up from their hallucination, and the price of Bitcoin is going to tank.
Well, I think that you have to ask yourself, is this as an asset? It's not a currency, it's not even an asset. Usually stocks, bonds, loans, real estate give you some income, dividend, coupon, interest, or rent. Some other assets like residential real estate give you use, housing services. Gold doesn't have any income, but there's a use in industry, as utility, as jewelry, and has a past monetary use as a store of value. You look at Bitcoin, it doesn't have any income, it doesn't have any use, it doesn't have any utility, so it's a pure speculative, self-fulfilling bubble on price appreciation. It's like tulip mania, but in case of tulip mania, at least tulips had some utility. Even today, people love flowers. In this case, you have an asset that is not an asset because it doesn't have any feature of an asset, it doesn't have any feature of a currency, so it's just a self-fulfilling bubble. That's what it is.
I think the response to this is quite clear. The intrinsic value of the traditional currencies that we use right now is dubious at best. It's not like the traditional currency we use right now is useful in any way other than its function as money. Most of it doesn't have physical form. Most of it is simply in digital form. The only reason why we assign any value to the money that we use right now is the fact that we have faith that other people will accept this money as payment. Now, with the market cap of Bitcoin reaching $1 trillion and the number of holders of Bitcoin nearing 100 million people, how confident do you think Bitcoin holders are that if they wanted to sell their Bitcoin, they could find a buyer? I'd say they're pretty confident. I mean, there are traditional currencies today that don't have 100 million owners and are not near $1 trillion in market cap. Now, a counter argument to this is that, well, traditional currencies are backed by governments. So the US dollar, for example, is backed by the full faith and credit of the US government. So the US dollar is legal tender. And legal tender is anything recognized by law as a means to settle a public or private debt or meet a financial obligation, including tax payments, contracts, and legal fines or damages. So by law, people have to accept dollars as payment. And that's not nothing. In the case of Bitcoin, there is no government backing it. It's not legal tender. And while it's true that there is no government necessarily backing Bitcoin, there is also no government that is able to manipulate its value. What Bitcoin is backed by is software that is, at least theoretically, incorruptible, and since its inception 12 years ago and counting, hasn't been corrupted yet. So now the question that people have to ask themselves is, which is more valuable? The backing of a government whose desires can be manipulated, or the backing of software that appears to be incorruptible, hasn't been corrupted since the 12 years it has been in existence, and whose security only increases the more people connect to it? The second reason cited by the people who hold the pessimistic view on Bitcoin and think that it's going to zero is that they think the governments of the world will eventually ban it. Legendary investor Ray Dalio says this about Bitcoin.
And if it becomes material, governments won't allow it. I mean, they'll outlaw it, and they'll use whatever teeth they have to enforce that. They would say, okay, you can't transact in Bitcoin, you can't have a Bitcoin. So then you have to sort of be almost like, is it a felony? And I'm going to have to be a felon in order to transact. They outlawed gold. What's wrong with gold?
Now, while I agree that this is a risk, I don't think it's actually going to materialize in developed countries. I could be wrong, but the more I think about this, the less likely I think it is to happen. There is a number of reasons why I think this, perhaps the most prominent of which is the experience of countries that have attempted to ban it. So even a police state like China wasn't able to ban the use of cryptocurrencies by their population. So when the Chinese state tried to crack down on cryptocurrencies, a lot of Chinese just moved their trading activity to foreign exchanges that were based in Japan and Hong Kong. Allah subhanahu wa ta'ala says, وَأَمَّا مَا يَنْفَعُ النَّاسَ فَيَمْكُثُ فِي الْأَرْضِ, which means, and as for that which is beneficial to people, it stays in the ground. Things that are useful to people tend to have a very strong staying power and are really difficult to stamp out. And while the Chinese ban on cryptocurrency was not necessarily effective, it did end up retarding the progress of development for many key technologies in that country. After successive crackdowns on the industry, including a ban on transactions between fiat and cryptocurrencies in 2017, China lacks a cohort of local stocks tied to digital coin exchanges and trading platforms. A Bloomberg-curated basket of 7 key Chinese A-share stocks with ties to the blockchain technology underpinning cryptocurrencies has fallen about 16% so far this year, according to data compiled by Bloomberg. That compares with a 36% rise in an Elwood asset management index tracking global blockchain-linked shares. So I think many countries are going to look at the Chinese experience with trying to ban cryptocurrencies, and they're going to see that it was ineffective and it just encouraged capital to go outside of the country, and it delayed progress in the development of a lot of key technologies like blockchain inside that country, and they're going to conclude that an outright ban is probably a bad idea. It seems much more logical and therefore more likely for discerning governments to attempt to regulate Bitcoin and other cryptocurrencies and tax them, and I think that's what you're seeing right now and you're going to see more of in the future. The third reason why people take the pessimistic view on Bitcoin and think that it may go to zero is competition from other cryptocurrencies, and notably competition from proposed central bank cryptocurrencies. So China is working on its own digital currency. The European Central Bank will likely issue their own years later, and other central banks are seriously considering it. And how these currencies may be different from the ones we use today is that they won't necessarily need an intermediary bank between the central bank and us. So basically, citizens would theoretically have accounts with the central bank itself. And the central bank would be able to keep tabs on where the currency they issued is at any time, and they could directly tax transactions that happen in those currencies. So basically, there's a lot of privacy that people will lose if they use these currencies. And I see a lot of costs for people in return for a really marginal improvement in efficiency. So I'm not really sold as of yet on the value of central banks' cryptocurrencies from the user's perspective. I can see why a central bank may want them, but from the average user's perspective, I'm not sure the benefits outweigh the costs. Furthermore, I don't think that these currencies could compete with Bitcoin, because remember, the value proposition of Bitcoin is not that it's more efficient. It's not necessarily that it's faster to deal with. The main value of Bitcoin is that its supply can't be manipulated. It's a tool for saving purchasing power at no risk of loss. Whereas the supply of cryptocurrencies that are issued by central banks is in the hands of those central banks. So they will lack, these cryptocurrencies will lack the main value proposition that Bitcoin brings to the table, which is the fact that its supply can't be manipulated. And I don't think a central bank cryptocurrency can ever offer this value. Satoshi Nakamoto, the inventor or inventors of Bitcoin, expresses this well by saying, "The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust." So it's safe to say that I don't see the arguments behind the pessimistic view of Bitcoin going to zero. I don't see these arguments as being high probability. It's possible that there may be something I'm missing here. I mean, yeah, Juj and Juj could start popping out from China tomorrow, but I don't see anything currently on the horizon that would cause me to take this pessimistic view of the price of Bitcoin. Now let's talk about the most optimistic prediction for the price of Bitcoin that I've found. And this price prediction is based on Bitcoin serving as a store of value. This view not only sees Bitcoin as a replacement for gold, which people obviously use as a store of value, but it also sees Bitcoin as a replacement for a lot of other stuff that people use as stores of value, such as stocks and real estate and bonds and other assets that people wouldn't necessarily be interested in just on their own merits, but they buy into because they don't want to keep their money in cash and they want to preserve the purchasing power of their money. So people in the presence of Bitcoin will no longer have to look at these assets to store value. They can just use Bitcoin. Michael Saylor, a prominent advocate for Bitcoin, expresses this view rather well.
I do think, I think that demonetizing gold gets you to 500,000, and that's simply pulling all the monetary energy off of the gold rock from gold bugs who believe that gold is a store of value and a safe haven. But it's important to note, there are a lot of organizations and a lot of investors that don't use gold as their safe haven. They use government debt, sovereign debt. And so cash is a safe haven. And sovereign debt is a safe haven. And another safe haven people use as a store of value is an index fund, bond index funds and stock index funds, like the Russell 2000, the S&P 500, the Dow index. So all told, I think there's between $300 and $400 trillion worth of fiat instruments, cash, debt, stock, commercial real estate indexes, something in that range. They're all, if you look at all of that, half of that monetary energy, maybe more, between 50 and 75%, is simply seeking a store of value as a container.
So based on Michael Saylor's prediction, he sees potentially $100 to $300 trillion moving into Bitcoin for its function as a store of value. That would bring the price of every one Bitcoin to anywhere from $5 million to $15 million. Now, the question that I ask myself is, what is wrong with Michael Saylor's argument? Now, I'll admit that I don't think 300 trillion will flow into Bitcoin. I don't think Bitcoin is going to capture the entire function of being a store of value. But could it potentially capture 1/5 of it? Or 1/6 of it? That would bring the market cap of Bitcoin from the 1 trillion that it is today to 50 or 60 trillion. So it would take the price of a Bitcoin from the around 50,000 that it is today to 2.5 million to 3 million. Is that possible? Honestly, I think it is. Now, how long it takes to get there is anyone's guess. It could take 10 years, it could take 20 years, who knows? But what I think is clear, at least to me, based on my reasoning, what's clear to me is that we're still at the early stages here, and that it's not too late to buy Bitcoin. And so that's what I continue to do. I continue to buy Bitcoin. I'm dollar cost averaging into it. Now, as I mentioned in the beginning of the video, this is not investment advice. Make sure to do your own research. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.